Hey everybody, Larry Elford here. We're going to give you another version of how financial advisors are commissioned salespeople. And here's Keith Ambashier and Ed Waitzer saying our investment advisors' moral compasses are still being aligned. We're going to run through half a dozen websites here and give you a look at this. August 19th, 2016. Keith Ambashier is one of the best pension analysts in the country. Rotman School of Management. Director Emeritus of International Center for Pension Management. Ed Waitzer is one of the top securities lawyers in the country, Chair and Director of the Hennick Center for Business and Law, Osgood Law School, Senior Partner at Stickman Elliott. And they say, should caveat emptor have to apply when buyers think they're hiring a professional help them do the shopping? You're starting to hit on the buttons here that financial professionals must act in the best interest of their clients, but actually they're saying that that is long overdue. Right now, financial professionals can take advantage of their clients and call themselves advisors, and that's what we're going to look at here. We're going to listen to a couple of minutes from the U.S. side of the fence, and you can see what we're dealing with. We just don't talk about this in Canada very much. So here it is.
And it only 21 times. So think about what that means. You've done the right thing. You've worked hard. You've saved what you could. You're responsibly trying to prepare for retirement. But because of bad advice, because of skewed incentives, because of lack of protection, you could end up in a situation where you lose some of your hard-earned money simply because your advisor isn't required to put your interests first. And the truth is, most people don't realize that's happening.
Okay, so that's the real deal. It's happening in the U.S. It's happening in Canada as well. But again, it is about 1% of the coverage in Canada talking about it.
Yesterday, we told you about a senior citizen who got some financial advice that cost him tens of thousands of dollars. The person who gave him that advice was a mutual fund salesperson who was registered with the province. But not everyone who offers financial advice is required to be registered or to be qualified. Our consumer watchdog, Yvonne Colbert, is back with the story.
Good morning, Yvonne.
Good morning, Stephen.
Yesterday we heard about Mr. Longard. The person who gave him financial advice was registered as a mutual fund salesperson. Are you telling me that there are others who give financial advice that aren't regulated?
Exactly, and they're called financial planners and advisors, and that's a big concern.
That's a big concern for anybody who knows about it, and sadly most people don't know about it. The industry tells you, trust us, we're your financial advisor, and they don't tell you that that's a bit of a lie, even a lot of a lie, and that they're commissioned salespeople. We're going to look at it until we get it straight. This is the Financial Planning Standards Council of Canada.
I'm in a financial bind.
I'm going to look at it less than a minute.
This out.
This is way too important to leave to chance.
It's so overwhelming. There's no second chance. I need to get it right.
Did you know that you could wake up tomorrow morning and print a business card that says you are a financial planner? In fact, there are no laws or regulations that would stop you from doing it. Can you imagine what it would be like if someone could wake up tomorrow and open a practice as a doctor, a lawyer, or an engineer, and never have to be accountable to any educational standards or ethics? Unfortunately, this is the case with the title financial planner, which is one of the most commonly misused titles in the financial services industry.
Let's look at the U.S. side of this street. Congressional Testimony last year, 2016, witnesses, 2015, witnesses say brokers try to pass themselves off as fiduciaries. So then they go in to talk about Allstate's insurance, and Merrill Lynch claims to offer investors that puts your needs and priorities front and center. The firms, however, have refused to acknowledge that they owe a fiduciary duty in arbitration when it breaches that duty to investors. Billions each year slip through the fingers of American investors because of conflicted investment advice. Brokers are not now advisors, nor can they legally put themselves out as advisors. So how can the Department of Labor's fiduciary rule, and it goes on to give more. I think I've outlined the problem a little bit. Let's jump back to Canada and let's do a check at a website. And that website was aretheyregistered.ca. Okay, we're at the Canadian Securities Administrator website. The address is aretheyregistered.ca. We're going to do a search. Individual search, detailed, leave the name blank here. Pick a firm you like. TD Waterhouse, jurisdictions, we'll leave that for all of Canada categories. Let's see how many advisors TD Waterhouse has. Your search returned no records. Please try searching again. Back to search. I'm going to try a different category. The other one is an advising representative, which is there are 100 records shown for advising representative, and for instance this fellow here is registered in these 4 provinces, and he's got a dealing representative license and he has an advising representative license. To the best of my understanding, dealing representative is a salesperson who represents the dealer. An advising representative can call themselves an advisor, but must represent, as a portfolio manager, must represent the interests of the client. And you can get a little more on that on the understanding registration page by clicking on that question mark. Dealing representative is a salesperson, and an advising representative is a person who provides advice on securities. So these guys can call themselves advisors. These guys cannot. These guys under the law have to call themselves dealing representative, which is code word for salesperson. Wish they didn't have to show you a code. This also dual licensing, you have to worry that they might be representing the dealer at one moment while they're talking to you, and then they're representing the advice giving side when they are tempting you with their marketing talents. So they could bait you with this particular promise and then switch you and deal with this one without having to tell you in between. Back to results, back to search, category. Let's see how many dealing representatives they have. $3,159, exactly 31 times more dealing representatives. Here's this fellow again at TD Waterhouse Private Investment Counsel. The guys at TD Waterhouse Canada appear to be dealing reps, salespersons in other words, dealing reps, and the guys at TD Waterhouse Private Investment Counsel appear to have an advisor license. You need to be quite clear on that, whether you have someone who's even entitled to call themselves an advisor or not. Check any investment firm you like, and here's where you go to find out. Relationship. Here's Globe and Mail, 2007. $25 billion was the estimated cost from just mutual funds. So, mutual funds, $25 billion a year through mutual funds, the deadly combination of investor naivete and industry marketing savvy, costing Canadians mutual funds $25 billion a year. That's the Rotman International Centre for Pension Management at the University of Toronto. They're saying that the difference between mutual funds and professional pension investments, pension funds beat mutual funds by 3.8% a year. That's how much the marketing skim is to these guys who are calling themselves advisors and their dealers that they represent, because again, they're dealing representatives. So So you apply a 3.8% haircut to 690 billion Canadians have invested in mutual funds, implies a wealth transfer from Canadian mutual fund investors to others of 25 billion a year. Now you just take that and consider the fact that the investment industry now has $2 trillion that Canadians have invested in mutual funds. And so you can at least double that 25 billion amount, so you're at 50 billion a year if we just move up to today's dates instead of the date it was published. So we're talking about $1 billion a week of harm from just one area, Canadian mutual funds. Billion a week. That's a Fort McMurray fire every, 3.5 weeks. And I'll finish with this and then I'll shut up.
You should absolutely save for retirement if you can. And many do. We currently have around $24 trillion sitting in retirement.
We're taking a look now at John Oliver's show, and this is HBO looking at U.S. situation again. The United States is talking about this and having congressional testimony, and in Canada, we just harvest Canadians. The financial industry is too strong. The regulators are weak and captured.
And that figure doesn't even include the wealth we have in stockpiled Beanie Babies. So let's call it $24 trillion and $32. And a lot of that money is in the hands of financial services companies. So let's talk a little about how they work, which I know sounds boring, but as a favour to your future self, it is worth watching this for 20 minutes, because you could easily make small mistakes which could seriously cost you down the line.
I'm only going to play it for another 2 minutes.
So let's start with financial advisors. They are the wholesome, friendly-faced experts that you see in ads like this one from Chase.
Through all life's milestones, our trusted advisors are with you every step of the way.
Congratulations. Thanks for helping me plan for my retirement. You should come celebrate with us. I'd be honored.
Plan for your goals with advisors you know and trust.
Wait, that is a clear example of deceptive advertising, because nobody invites their financial advisor to a wedding. If cousin Barbara finds out that she didn't get an invite but your Chase guy did, she's gonna flip her shit on you. But there is something you should know about financial advisors. Even their name means less than you might think. The Financial Industry Regulatory Authority warns customers to be aware that financial analyst, financial advisor, financial consultant, financial planner, investment consultant, or wealth manager are generic terms or job titles and may be used by investment professionals who may not hold any specific credential. So financial analyst is just a fancy term that doesn't actually mean anything, sort of like brand ambassador or the John Oliver effect. Meaningless, completely meaningless. But even many well-credentialed financial advisors are paid on commission. So if they recommend something for you, it may be because they stand to make money. In fact, sometimes they're actively incentivized not to act in your best interest.
I think you should talk to your MP and your MLA and demand investor protection, not the kind of crony self-regulation thing that the securities commissions have, where they actually look the other way at people who violate the laws and call themselves an investment advisor.